Welcome to the Deep Dive. Today, we're going to be looking at Total Energies and how they did in 2023.
Uh-huh.
And we're going right to the source, their own 2023 Form 20-AF filing. So get ready to go deeper than just the headlines. We're going to be talking about their business segments, their financial health, how they reward their shareholders, the whole 9 yards.
Sounds like we're about to get a crash course on Total Energies.
Exactly. Now, I know Total Energies is trying to adapt to this changing energy landscape, but I still think of them as an oil and gas company.
Yeah, it's true. They've been in that space for a long time, but they've really been working on becoming a more well-rounded energy player. In fact, they actually officially became a European company, a Societas Europea, or SE, back in 2020.
Okay, so it's more than just like a name change then. What does that change tell us about like their overall strategy?
Well, it shows that they're committed to, expanding their presence in Europe and following all those regulations. But more importantly, I think it shows that they're trying to move towards what they call a balanced energy transition. And so I guess you can think of it like as 5 main business segments. They have the kind of traditional exploration and production, which focuses on oil and gas. Then there's integrated LNG, which is all about liquefied natural gas, which is a big player in global energy markets.
So still very much in the fossil fuel game then, but with kind of a global perspective.
Yeah.
Where do the other segments fit into all of this?
Well, that's where that balanced transition comes in. Their integrated power segment is all about making electricity, and that includes renewables like solar and wind.
Oh, interesting.
They also have refining and chemicals, which makes everything from fuels to plastics. And lastly, there's marketing and services, which is about getting all their products to consumers like us.
Wait, so if I'm like filling up my gas tank or like charging my electric car,
Yeah.
I could be using Total Energies. That's pretty wild to think about. It sounds like they're really hedging their bets.
You could say that. They're definitely trying to be a part of both the traditional energy world and the renewable energy world, which, comes with its own set of challenges, of course.
Speaking of challenges, let's talk about their 2023 performance. How did this balanced energy transition actually show up in their numbers?
Yeah, so overall, Total Energies had a really good year. Their financials showed some solid growth in cash flow, which was partly influenced by what was happening in the global energy market. Looking specifically at their oil and gas production, we see some interesting trends. Production actually went up by 3% overall, and that was driven by new projects starting up in places like Angola, Brazil, and Nigeria. But they also had a 3% decrease in production from some strategic decisions they made.
Strategic decisions, like are they pulling out of certain areas?
Exactly. They ended their operations in Myanmar and Russia, and some of their operating licenses in Thailand actually came to an end too. Things like OPEC plus quotas and security challenges in places like Libya and Nigeria also played a role in those production numbers.
Okay, so kind of a mixed bag on the oil and gas front, some growth, but also some strategic downsizing. But what about all that money they've been putting into renewables? Is that starting to show any results?
Yeah, so this is where it gets really interesting. Their integrated power segment, which includes all those renewable energy projects, saw their adjusted net operating income jump way up. We're talking a 90% increase to hit $1.853 billion.
Wow, 90%. Something must be working over there. It seems like they're really walking a tightrope, trying to balance these traditional energy sources with this big push towards renewables. What does that balancing act look like when we look at their financials?
Well, you can't really understand how a company is doing without getting into the nitty-gritty of their financial statements. We're talking about things like the income statement, the balance sheet, and the cash flow statement. The holy trinity of financial analysis.
All right, let's get into it. I'm ready to put on my financial analyst hat. Where do we even start?
Well, first we got to look at the income statement. That tells us the story of their revenues, their expenses, and ultimately their profits. It gives us a sense of their core business operations and how well they're generating those profits.
Okay, so the income statement tells us if they're actually making money. What are the key things we should be looking for there?
We want to see good revenue growth, strong margins, which basically means the percentage of revenue they keep as profit, and of course, a solid bottom line, which is their net income. We also got to consider any unusual things that might be affecting those numbers, like maybe gains or losses from asset sales or special charges.
Makes sense. So the income statement shows us the big picture of their profitability. But what about the balance sheet? What can we learn from that?
The balance sheet is like a snapshot of their financial health at a particular moment in time. It shows us everything they own, their assets, and everything they owe, their liabilities. The difference between those two is their equity, which is the owner's stake in the company. We're looking for a strong balance sheet with more assets than liabilities, showing that they're financially stable.
So it's all about finding that balance right, using debt strategically to help them grow, but not taking on too much risk.
Exactly. Now, the last piece of the puzzle is the cash flow statement. This one's all about tracking the movement of cash, which is super important for any business.
Right? Cash is king. What can we figure out from the cash flow statement?
It tells us how much cash they're making from their main operations, how much they're spending on investments, and how much they're using for things like financing activities. A really important thing we'll look at is free cash flow.
Yeah, free cash flow. That's the money they have left over after paying all their bills and investing in the business, right?
Exactly. And that's what we'll be digging into as we analyze how Total Energies is doing. But before we get lost in all the numbers, let's step back and think about what this means for the people who have invested in Total Energies.
Okay, let's talk about shareholder value. What are they doing for the people who put their hard-earned money into the company?
Well, Total Energies has a two-part plan for creating shareholder value: dividends and share buybacks.
Let's start with dividends. What kind of payouts are we talking about?
So throughout 2023, Total Energies paid out dividends to their shareholders, and they're planning to keep doing that. Now, the exact amount of the dividend can change a bit depending on how much they earn and their overall financial performance each year.
So consistent dividends, but with a little bit of flexibility.
Got it.
Now, what about share buybacks? How do those work and why do companies do them?
A share buyback is basically when a company buys back its own shares from the market. They might do this to reduce the number of shares that are out there, or to increase earnings per share, or sometimes just to give cash back to shareholders.
So it's like they're saying, hey, we really believe in our company, so we're going to buy back some of our own stock. It's out of confidence, right?
Exactly. And Total Energies really put their money where their mouth is in 2023. They spent a whopping $8.33 billion, which is about $9 billion, buying back and canceling shares.
Wow, that's a lot of money. They clearly want to keep their investors happy. But looking beyond those shareholder rewards, where is Total Energies headed in the long run? What does the future hold for this energy giant as they try to navigate this tricky energy transition?
Well, that's the million-dollar question, isn't it?
It is, and one we're going to have to tackle head on. But first, why don't we break down those key financial statements and see what story they tell us about Total Energies' performance in 2023. Okay, so we've talked about how Total Energies wants to become this big multi-energy company. But let's look at how that's actually playing out in their financials.
Yeah, let's start with their revenue. In 2023, Total Energies brought in a massive $218.945 billion.
Whoa, that's a lot of money.
It is. It really reflects the growth they saw during that year.
Okay, their top line looks pretty impressive, but what about their actual profit? What was their net income?
Oh, they definitely made a profit. Their net income for 2023 was $21.384 billion. But it's really important to remember that this number can be affected by different things like taxes and what they call special items.
Special items, what are those?
Basically, they're like one-time events or unusual things that happen outside of their normal operations. Like if they sell an asset and make a profit or a loss, or if they have to pay some kind of special charge, those can really change their net income.
Okay, so the net income is important, but we need to look closer and understand what's behind those numbers. It's not just about the final profit number.
Right. Now let's look at their balance sheet. Total Energies has a ton of assets. We're talking $283.654 billion worth as of December 31st, 2023.
Wow, they must have some valuable stuff, but we also need to think about what they owe. How much debt do they have?
Their total liabilities were also $283.654 billion.
Oh, hold on a second. Isn't that a bit high?
It's important not to freak out when you see a big liability number.
Yeah.
We need to look at what those liabilities actually are.
So not all debt is bad debt.
You got it. A big part of their liabilities is accounts payable, which is basically short-term debt to their suppliers. They also have non-current financial debt, which includes long-term things like bonds.
How do we know if they have too much debt? Are there ways to measure how risky their finances are?
Analysts use things called ratios, like the debt-to-equity ratio and the debt-to-assets ratio. These help us see how much debt a company is using to finance its assets. Like if a company has a really high debt-to-equity ratio, it might mean they're relying too much on debt, which could be risky if the economy takes a downturn.
It's a balancing act, right? They need to use debt to grow, but not go overboard.
Exactly. Now let's move on to the cash flow statement. This statement shows us the actual cash coming in, going out of the company. And in 2023, Total Energies generated a whopping $47.367 billion in cash from their operations.
That's a lot of cash. But what about their free cash flow? That's the cash they have left over after paying their expenses and making investments, right?
Exactly. To get that free cash flow number, we subtract their capital expenditures, which is the money they spend on things like new buildings and equipment from their operating cash flow. In 2023, their capital expenditures were $19.8802 billion.
So if we take their operating cash flow of 47.367 billion and subtract their capital expenditures of 19.802 billion, that gives them a free cash flow of 27.565 billion.
You got it. That's a lot of money they can use to pay their shareholders, reduce debt, or invest in their future growth. And speaking of shareholders, let's talk about how they're creating value for them.
Yeah, let's get into those dividends and share buybacks. What are they doing to reward their investors?
Like we mentioned earlier, Total Energies has been paying dividends consistently, and they plan to keep doing that. Now, the exact amount of the dividend might change from year to year, depending on their financials, but they're definitely committed to rewarding their shareholders.
So steady dividends are in the picture. What about share buybacks? They spend a lot on those in 2023, right?
Yeah, they did. They used $8.33 billion, which is about $9 billion, to buy back and cancel some of their shares. That represented 5.9% of all their shares as of December 31st, 2023. This shows that they really believe in their company's future.
Wow, that's a strong statement. But the energy industry is changing so fast. What does the future actually look like for Total Energies? How are they going to manage this shift towards cleaner energy sources?
That's the big question. And it's something we need to look at carefully. They're clearly aiming to be a leader in the energy transition, but there are going to be challenges along the way.
All right, so we've talked about their financial performance, their plans for shareholders, and their goal to be a major player in the clean energy world. But what does this all mean for their future? Let's try to predict what's ahead for this energy giant. Okay, we've talked about a lot. Total Energy's different businesses, how they did financially in 2023, and their plans for their shareholders. But looking forward, what's in store for this company as the energy world keeps changing?
Yeah, that's a really interesting question. Total Energies is definitely working hard to be a leader in the energy transition, but it's not going to be easy. There are going to be some bumps along the way.
All right, we've talked about them putting a lot of money into renewables, especially with their integrated power segment. But can they really shake off that image of being an oil and gas company and actually become a major player in clean energy?
Well, it's a tough balancing act. They're in an energy market that's constantly changing with all sorts of geopolitical risk that could really mess things up. We've already seen how things like OPEC plus quotas and security problems in some regions can affect how much oil and gas they produce.
And we can't forget about all those changing regulations.
Yeah.
Governments everywhere are making policies to cut down on emissions and encourage clean energy. Total Energy is going to have to be pretty adaptable to keep up with all that.
Absolutely. And following all those environmental rules and investing in cleaner technologies takes a lot of money. The delicate balance they have to stay profitable in their traditional businesses while still putting money towards a more sustainable future.
So they're getting pressure from all sides: investors, climate activists, governments. But let's focus on their renewable energy strategy for a minute. We know they're investing heavily in their integrated power segment, but what does that actually look like?
Well, their strategy is all about boosting their capacity to generate renewable power, especially from solar and wind. But they're not stopping there. They're expanding into every part of the power business, from making and trading electricity to selling renewable energy to both businesses and regular consumers.
So they're not just building solar panels and wind farms. They're trying to be a one-stop shop for all things renewable energy.
Exactly. They're building this whole ecosystem to support the shift to clean energy. And to deal with the risks that come with this digital transformation, they've put in place a pretty strong cybersecurity program.
Cybersecurity. That sounds serious. Why is that so important for an energy company?
Well, think about it. Energy infrastructure is becoming more and more connected and reliant on technology. Protecting all their systems and data from cyber attacks is super important. They need to make sure things keep running smoothly and prevent any major disruptions.
It makes you realize that cybersecurity isn't just about IT anymore. It's a crucial part of doing business, especially for a company like Total Energies with such a big and complex operation.
Exactly. And they seem to get that. Their cybersecurity program is based on well-established frameworks like the NIST cybersecurity framework and the ISO 27011 standard for information security management.
Okay, so they're not taking cybersecurity lightly. That's good to know. But as they move forward with all these changes in the energy world, what are the key things you'll be watching for to see how they're doing?
As an expert, I'll be paying close attention to a few things. First, are they really putting their money into renewables like they say they are? Second, are they actually making progress in reducing their carbon emissions? And finally, can they keep making money and growing while shifting to a more sustainable business model? Those are the things that will determine their success in the long run.
So it's a challenge with lots of different aspects. They have to balance financial performance with being environmentally responsible, all while adapting to a world that's changing super fast.
It's definitely a high wire act. But it's also super interesting to see how a company like this is trying to reinvent itself as the world goes through this global energy transition.
It really is. Total Energies is in a unique spot, trying to be both a big oil company and a leader in clean energy. They're definitely make some bold moves. But the big question is, what does the future hold for companies like them as we try to deal with climate change and the growing demand for clean energy? It's something to think about as you learn more about this ever-changing energy world.
It's definitely a story worth following.
Well, that wraps up our deep dive into Total Energies. Thanks for joining us as we explore their performance in 2023 and their plans for the future. Until next time, keep learning, keep asking questions, and keep diving deep.